So HIMS is about to report earnings on Monday after the market closes, and what better stock to talk about than the day before? Let's go ahead and jump right into it. I want to look into the technicals. I want to look into the fundamentals. All I ask you to do is watch the entire video. Feel free to share your thoughts and feedback down in the comment section, what you think it's going to do after it reports earnings. Would you invest in it? Would you not? Why does it or does it not meet your criteria? And again, I don't normally make videos like this. I would love to make more. All I literally ask you to do is drop a thumbs up on this channel, and also don't forget to subscribe. Let's go ahead and just jump right into it. So I am using the Webull trading application. It's linked in the description down below if you want to check it out yourself. This is HIMS, ticker symbol HIMS. It's one of the best performing stocks of 2025. Let me make this very clear. I would not recommend this as an investment for any beginner that's just getting started. Now, again, it's not that it possibly can't go up. That's not the point. The point is that it's a parabolic stock in the sense of how quickly it went from a very low price per share to very high price per share. And as we saw last week, there is a 32% sell-off from highs of $73 to lows of $49. That is a 32% sell-off. I'm not like other YouTubers that will be like, hey, this is what I'm doing. I think you guys should do the same. Never. If I choose to ever take a trade, you guys have seen me do it many times before. If you ever watched me trade live, I encourage you to not copy what it is that I'm doing. My risk tolerance is not yours, and we will be talking about that to kind of have a better understanding of what your risk tolerance might be, all within this video. So again, sit back, relax, and I hope that you learned something new. So this stock has been going insanely, it's been breaking out again from 2025, from the year of when we started 2025. Let me go ahead and pull it up here. To where we are at right now, it is up 101%, but from the highs that we made at 72, almost $73, this thing was up 197%. So you can see why people, right, with just common sense can be like, hey, this thing might be a pump and dump. This thing might be overvalued. It's just, it grew much quicker than what the company, just the company itself is growing at. The company is not bad, right? I like talking crap. I like to trigger people on YouTube. I call it a meme stock because of the way that it's trading. I think it's a new form of meme stock movement. I don't know if you guys would agree with me, but there's like PLTR, HIMS, TEM, MicroStrategy, Carvana. They're companies that went parabolic, that absolutely gapped up. And it's not that they're terrible companies, don't get me wrong. It's not like GameStop, because GameStop was a terrible company, just like MicroStrategy is. But like HIMS actually is a company that is growing quarter after quarter and year after year. But again, the growth that it's experiencing as a company is not as significant as the growth that it's experiencing as a stock itself, right? Just it's outperforming the way that the company is growing. It's not a bad company. It's just simply outgrowing the actual company itself. That's not wrong, but that's just, again, when people begin to say, hey, this thing might be overvalued within the short period of time. Long term, maybe it does belong at $70 per share. It's just not there yet. At least fundamentally, it's not. But we'll get into that in just a little bit. So again, after the market closes on Monday, HIMS, ticker symbol HIMS, will be reporting earnings as well as TEM. But the big focus today is HIMS. For those that do not know, the current market cap is right around $10 billion. It was previously right around $15 billion. Keep that in mind, $15 billion. That is with a B. What's the market's expectation? Market's expectation for this company to report earnings, it's reporting Q4 earnings of 2024 as an earnings per share of about almost 17 cents per share and $469 million in revenue. Now, again, let's look at the track record. It does have a really good history of reporting and exceeding expectation. I do believe, right? If you guys heard the news of what caused, the first thing that you might be asking, well, what the heck? What caused it to sell off 32%? There is a specific drug that was pretty much, there's a shortage of, and HIMS had like an alternative for it. So therefore, there's a lot of demand within a short period of time for HIMS. Well, that shortage is there no longer, right? The shortage is not present anymore. So therefore, the demand is just kind of like the pandemic. When the pandemic hit and then the world opened back up, there's companies that did very well during the pandemic because we were enclosed. Just like, again, this company was doing very well during the shortage. But once the shortage is no longer, and therefore people can go back to not the alternative of HIMS, it's not that people will always will, but again, just demand naturally will not be as high as possibly as what it was. Overall, with this Ozempic alternative for HIMS, it's not detrimental to the overall company. It's less than 10% of its revenue. But nonetheless, when a company is trading at a multiple of what it actually produces, all it takes is some negative news to make it look not so perfect, right? Because again, it didn't belong to be trading at $73 per share. And all it took was some form of reality of like, hey, this is something that was not factored in advance, just kind of like we saw with Palantir, where Palantir is still a very strong and successful company, but it crashed 25% just because of the defense budget possibly being trimmed. It's not even confirmed yet. But again, it's a perfect stock that then looks not so perfect anymore. And that's the reason, because it was forecasted that wasn't going to be an issue, but now it is. So that is why the market's correcting itself. But what a perfect time. I mean, really, I'm not trying to be sarcastic here. If you are bullish on HIMS, what a perfect time for a pullback, because you saw what it's capable of. And if you want to put your money where your mouth is, right, because it's going to be reporting earnings on Monday. And if you truly do believe this stock is going to break out, it's going to go to $80 or $100 per share, put your money where your mouth is. It's at $49. And if that's the case, from $49, what's the best case scenario? We'll talk about that in just a little bit. But if it does recover to previous all-time highs, that's about 48% of potential downside. And of course, of upside. And there's, of course, huge downside based off of previous lows of over 60 to 70% based off of, again, if it doesn't actually meet market's expectation. But now that we talked about that a little bit, diving a little bit deeper, this is Investing Pro. If you want to be able to do a little bit more of a deeper fundamental analysis with the stocks that you trade, again, Investing Pro is how I do it. You guys can check it out. It's the first link in the description down below. It's the biggest discount that they offer if you use my link, which is bigger than any discount that they have going on. Just a little heads up. With that being said, the thing that I love about this is that it has this fair market value or fair value widget. And it pretty much just talks about how much more downside there is for HIMS. So it talks about 24% downside because analysts' price target is right around $34 per share. And this is, again, not just one analyst, it's a total of 15 different analysts. It says, again, according to Investing Models Pro, the average or fair value is right around $37. So it says like the median price is right around $37 to $34 per share. So if we take that into consideration from where we are currently at, again, then that puts things into perspective of, okay, there's 20 to maybe 25% of potential downside, something to take into consideration. This shouldn't offend you. It's always taking both sides into consideration. You can't be narrow-minded and think that only the stock can continue to go up. That is the whole point of a meme stock, right? That all you think about is that it's going to go up and it will never come crashing down. At that point, you're considered a bag holder because you're hopeless. And anytime it pulls on back, you convince yourself that, well, this is only another opportunity to add more, right? Again, to each their own. If that's how you want to continue to trade, be my guest. But nonetheless, let's talk about what this company actually produces. When it comes down to the actual earnings, right? It trades at a PE ratio of 106 times its earnings. It's high, but in comparison to a lot of these other very hyped up and overvalued stocks, it's not that high. Palantir trades at over 500 times its earnings. When it comes down to Carvana, it trades over 2,100 times its earnings. Those are extreme examples, but they're examples, right? Even NVIDIA, I think, trades at over 140 times its earnings or 120 times its earnings. So, when I looked at that, the PE ratio wasn't completely crazy, but the difference is that those are tech companies. This is kind of like not a medicine, but like a health company. So therefore, again, these projected values tend to be a little bit more inflated and favored on the tech side, not as much on the medical or the medicine side. So just something to take into consideration. I mean, they can integrate AI, but at the end of it, again, it's not a tech company, right? So it's a company that produces as of now $1.2 billion a year, and its net income as a company is right around $101 million a year net. Something to take into consideration. I also dug a little bit deeper and I wanted to show you guys this. Again, just so you have an understanding, not to convince you to not trade it. I promise you, I do not care if you hold this stock. I do not care if you want to buy more. You're an adult. You should be able to do whatever it is that you want. I'm just here to talk about both sides. I think you can make a more informed decision so you are not as surprised if it ends up turning to go against you. With that being said, in the last 6 months, this is some of the insider trading activity, meaning the executives, the people that run this company to make it what it is. There has been a total of 2 transactions, 2 trades that have been purchases, 150 that have been sales. So a total of 152. From the CEO, Andrew, selling 40 times, buying 0, selling 1.685 million shares, $43 million is what he's locked in so far. I do want to remind you that a lot of these sales do end up being a part of their trade plan, which they have to release in advance. But nonetheless, it's something to take into consideration. You're seeing so much more selling than you are buying. While retail, all they're doing is buying, and all the insiders are selling. So again, just something to take into consideration. If it was such a good deal, why would they be so eager to sell millions, if not hundreds of thousands of shares? And then you have the CFO, $15.7 million worth of him stock sold. We have the COO, $10.5 million worth of the stock being sold, 9.8, 6.8, 1.1, and so on and so forth. You can kind of go down the list. This is all information that's readily available and that you can find yourself. The thing that I love, or the reason why I love sharing that, is so you can simply make a more informed decision. So now let's get into the fun part. We looked into some of the fundamentals. We know what the company produces. We know what the company's expectation is for their earnings per share and their expectation. A big part is going to be their earnings call, which is after their report. So that's one thing that I want to make sure that you fully understand, is that when this company or many companies report earnings, the first part shortly after the market closes is their earning report. That is how the company is doing based off of Q4 of last year, 2024. Now, don't get me wrong. The reason that this stock sold off was because of that, that shortage is there no longer. But that just was released recently. So I do believe that they might even fully exceed expectation for their earnings, but their guidance is going to be the big thing. And that comes normally 30 minutes to an hour after they report earnings. So there's many times that a company can beat earnings, but then completely change direction or exaggerate whatever direction it shows after the earnings call begins, because that's where you're going to be able to hear the CEO and the executives talk about what happened in Q4 and what's coming in 2025. This is where investors will get a deeper inside look into what is in store for HIMSS in 2025. And if it meets Wall Street's expectation, the stock can continue to skyrocket. If it doesn't, then the stock can begin to retrace. Something to take into consideration. So now that we understand that, let's plug it in, right? We talked about risk to reward ratios. So why, when asking the question, is this a good stock to possibly trade? With my experience level, I would say, yeah, I would entertain trading this. I would not entertain investing in this. 2 very different things. You will see that people will try to convince you, especially I saw a bunch of people on X, which is previously known as Twitter, that when this thing was trading at $63, $70 per share, people were telling people that this thing is going to $100. You should never be convinced to buy anything. If it's such a good deal, you should be able to be informed by the numbers or what the company is doing itself. You should never be convinced of, well, this thing's going to 100. At that point, you have to understand there's nothing wrong with it. It can go to 100, but it's just the momentum play. It's a stock worth trading, not a stock worth investing. 2 very different things. With that being said, if I were to set up a trade, which again, I do not trade companies as they're about to report earnings. I view it to be gambling, right? It's a coin flip. I do not know what they're going to report and how the market's going to react. I don't know what's going to be said during guidance and if it's going to exceed Wall Street's expectation. I don't think trading before earnings is a smart move for beginner traders. Let me make that very clear. I would rather be safe than to be sorry. But if I was an aggressive trader and I can tolerate that kind of volatility and risk, how would I approach this? Well, again, it's very hard to manage risk after the market closes, and that's when this company is going to be reporting earnings, but you could always do it somewhat with a limit order if you can try to get out quick enough. That being said, it's never guaranteed, especially not after market hours. Nonetheless, let's say that you do get in at $49.28. What's the best case scenario? This is what I love to talk about. The best case scenario is this thing breaks out and goes back up to at least $73 per share. Would you say that that's the truth, right? Some people might think that it is going to go to $80, some people to $100. I think it even gapping up 25% is more than enough opportunity to entertain, right? So when we plug it into that risk to reward ratio calculator from an entry of $49.28 and the possible exit of $80 with a possible stop loss, meaning that you manage or cut losses right around $45 per share, which is super tight, not very realistic. I'll have to adjust that because that's truly not a realistic cut losses, because if this company reports earnings and it reacts in a negative way, it will instantly be down like 5 or 10% so quick that I won't even be able to cut losses. So we might have to adjust that to like $40 per share. But again, just for the sake of it, this would give you a risk to reward ratio of 7.18, meaning that for every 1% of potential downside, it offers 7.18 of potential upside. That's a very healthy risk to reward ratio, meaning that, again, there's a lot more upside than there is downside risk. With $100 or $4,900, I could possibly make $3,000. I could possibly lose $428. And this is what I love sharing with our LPP traders. You need to understand that different traders have different risk tolerance. And this is where I really feel like you can figure it all out. Because when you plan out your trade like this of exactly where you plan to exit, where you plan to cut losses, like you lay it all out for yourself, so there's no surprises. So before you take the trade with your position size and what your trade plan is, you're fully aware of your risk to reward ratio, and you're also aware of what the best case scenario, but also the worst case scenario. So if I see this number and I see that, let's say that I do have to end up cutting losses at $40 per share, or let's say $39 per share. Now that gives me a 2.99, almost a 3-to-1 ratio, which isn't terrible, but not as favorable. So very quickly with this trade, I could possibly make $3,000 best case. I could possibly lose $1,000. So to me, I'm okay with that. I can tolerate that. I like those risk to reward ratios. I like those odds. But for a beginner, maybe that's just getting into it, they might be like, oh, I don't like that. I don't want to lose $1,000. And that's okay, right? Different traders have different tolerance levels. And that is why you get to formulate your trade plan and you get to choose what stocks you choose to trade. Because at that point, if you planned it all out and you see that the risk is just too high, then at that point, you never have to take the trade because it simply doesn't meet your criteria or it's just labeled as too risky. Now, let me change this. If this was as an investment, right, not a trade, meaning that as an investment, I wouldn't be cutting losses so quick. That's more of a trade setup. As an investment, let's say I think that this thing's going to go to $100 per share, which again, some people do, and that's fine if that's what they believe. As an investment, $100 per share. But now, where would I cut losses at that point? This is where investing and trading are very different, because this is where I believe with HIMS, because of how overvalued it still is, even at $49 per share, even after a 30% sell-off, there is so much downside potential that if this thing does correct itself as it normally does down to the moving average, well, what exactly does that look like? And I'm going to lay it all out for you to make it very simple. The profit potential, if it goes again up to $100 per share, is high, but then it comes at the risk of this potentially losing 50%, right? 52%, back down to $23 per share. So if we plug that in and now we change out our stop loss from 39 to 23, now our risk to reward is 1.93, meaning that it offers 1.93 of potential profit for every 1% of potential downside risk. Now I could possibly make $5,000, but now I could possibly lose $2,600. So this is again where you have to answer that question yourself. is this a stock worth investing in at that price level? And it's all based off of what you understand of the company and what you can tolerate. Because there's a lot of stocks that you can invest in that won't give you this type of negative exposure. It won't be so close to a 2-to-1 ratio, right? Just as you saw, there are companies that are better deals that are not as overvalued, but also might not offer you such a great of a return, but also they don't come at such of a great of a risk. So it's really important to take those two things into consideration. You will see some aggressive traders, and good for them. They like taking aggressive stocks, right? And aggressive trades because they can tolerate it. And hopefully they can long term, because we all know that all it takes is one very bad trade to wipe out all of the gains that we've made, right? But this is why it's so important that as you begin to develop yourself as a trader and even as an investor, that you take trades and investments that align with your criteria and that meet your criteria, regardless of what I'm doing or regardless of what other people are encouraging you to do. Your focus is to be selfish. All you should be focused on is what is in the benefit of my future self. That is it. Goose egg. It doesn't matter. No one else should try to influence that or try to convince you that you need to go in all in with HIMS or on whatever MSTR bullshit hype coin there might be out there, right? If it's not just and should not be just a trade that you take because you can, but it's a trade that you should take because it makes sense, that the risk to reward ratios make sense, the criteria make sense, and fundamentally and technically it aligns with your criteria. At that point, you've made an informed decision, you understand the risk, you understand your profit potential, and it's simply a more controlled environment that you are aware of versus getting caught or surprised and then never wanting to do this again because now you feel discouraged because you don't even know what you just experienced if randomly the stock drops and you lost an insane amount of money that you weren't prepared to lose. This is where planning out your trade really pays off. And that is why, again, for some people, it might be incredibly boring. But that's what we try to preach to all of our LPP traders that go through LPP and that get to watch me trade live, is that the whole point of our live trading sessions are for you to see what it's like for myself to be able to buy and sell these stocks, both good and bad, right? You get to see these raw live sessions, but you get to see everything that we talk about in the course be put together. And there's mistakes that I made, but there's also, of course, amazing trades that I take, and you get to see it all live in real time. If you ever want to tune on in, it's the second link in the description down below. You don't have to. I have a bunch of free videos on YouTube you're more than welcome to check out, but I just wanted to make sure that you were aware that if you are trying to get a little bit more dialed in and having a little bit more structure with your trading, that is what we cover within LPP, and then we put it all together daily with our daily live trading sessions. And if you are someone like myself that learns best by watching other people do, then again, I think you will resonate very well with the live trading sessions that we host on a daily basis. So again, second link in the description down below. You can sign up. It's a one-time payment, lifetime access, and it literally breaks down to $1.35 per day. So if that's something that you think that you would like to be a part of, second link down below, and I'll see you at Market Open on Monday for our live sessions. I hope that I earned your thumbs up. Please consider subscribing. Feel free to share your thoughts down in the comments section. And like always, let's make sure that we end the year on a green note. Take care, team.